Welcome to Common Sense Investing. My name is Cameron, and today I have a fantastic live stream planned for you. Today, I am going to introduce 3 stocks that are on my watch list. And the reason that I want to do this is I've been covering one new stock a week on my channel. It simply isn't enough. There's been so many stocks doing so well that my research list is starting to pile up. And I've got these stocks on there, sitting there, and they're doing well, and they're going up, and they're good opportunities, and I haven't had time to make a full-length video on them yet. So today I am going to introduce to you 3 stocks that are on my watch list that I simply don't have time to cover in a full-length video right now. So these won't be fully researched, but these will be 3 stocks that I've kind of had sitting there doing my research on that I need to introduce to you. Now, I noticed there's a whole pile of questions here about Enterprise Group. Late in the day, Enterprise Group did have offering that we're going to talk about. However, let me get through my presentation first, and then after that, if you want to ask me nothing about questions but of Enterprise Group, absolutely no problem. I'll sit around and chat about that. What I'd first like to chat about on this channel, though, is, this is why I'm making this video. Step 1 is find and research. So on my channel is a little bit different. I'm not a pumping channel. I'm not a marketing channel. I do a significant amount of research before I make videos on stocks. So this is what takes the time, right? Everybody thinks I should be able to put out 2 or 3 new stocks per week. It does not work like that because I'm not simply a channel that basically shows you the investor deck and walks away. I like to do my research. I need to shit test a stock before I introduce it to my channel. Step 2 for me is introducing a good company. Now, that doesn't mean it's a good stock. It doesn't mean it's a good investment opportunity, but I like to think that most of the time my research, me finding some of these stocks, the stocks that I cover on my channel, have gone through enough research that they're at least a good company. Now, a good company doesn't always make it a good stock, but a good company makes it a lot better chance of it being a good stock. Step 3 on my channel, of course, is continued coverage through live streams like this, which I do every Monday evening. I try to do some updates. Lately, there hasn't been a lot of updates on stocks, so I've been using my live stream opportunities to make videos like these. I've been making videos on the macroeconomics of penny stocks and everything I could possibly teach and learn about penny stocks. That's what my live streams has been on. Today, finally, any Enterprise Group has a little bit of news, but it was too late. It was late in the day. I couldn't get to it yet. So we'll talk about it later, right? Step 4 is learn, evaluate, and repeat. Because I want to make sure I keep having good stocks on my channel. I had good stocks last year. I got better stocks this year. I'd like to have even better stocks the next year, right? That's what I'm looking to get. Now, what makes my channel different here, and I want to talk about this for any new viewers, any new subscribers, because this is my second YouTube channel. I haven't made this very clear yet. I'm not a shareholder of any of the stocks that I cover on my channel, so I'm unbiased. That is one of the things that always bug me, even now today, when I watch a lot of YouTube videos, I watch a lot of social media content. There's a lot of people out there that are biased, and I always wanted to start a platform where people were unbiased, because once you have bias in a stock, it's really hard to get a good opinion, right? When you're watching a YouTube video or another platform out there and a person might have $100,000 of their investment money sitting in there, plus another $100,000 of warrants, what are the odds that that person is going to be able to talk to you about the bad things about the company or the stock? Very, very small. So I am not a shareholder in any of the stocks that I cover on my channel. But in saying that, this is also not financial advice. The purpose of my channel, the purpose of this platform is to have good discussions. Good investors looking for good stocks, hoping to have good communication to figure out what we want to do. What did I miss? What do I need to look at? What should I research, right? This is good communication about stocks and is in no way financial advice. But the nice thing about me not being a shareholder of any of the stocks that I cover on my channel, I'm not a cheerleader either, right? This is really bugging me. It really bugged me last year. It's really bugging me this year. If you want to lose money in stocks, typically the best way you could do it, I think the new number one way of losing money in stocks since COVID, since the meme stock era, is cheerleading these stocks where people just ignore all the red flags, ignore all the risk, ignore all the warnings, and they are so happy. They cheer on these stocks like they would cheer on their favorite sports teams, except when your sports team loses, typically it doesn't affect you other than you're pissed off for a couple hours. if your favorite stock loses, you lose a lot of money. So the best thing you could do, I think, in my opinion, on any channel, any platform, or when you're researching your own stocks, is to make sure you discuss not only the rewards, not only the good things about a stock, not only the good things about a company, but you have to be open and honest and transparent with yourself and other people about the risks. If you ignore the risks, if you ignore the red flags, you can end up losing a lot of money. That's what I plan on doing on this channel. That's what I have been doing on this channel. That's what I'm going to continue to do on this channel. If you would like to continue with this type of conversation about stocks where people get very pissed off at me because I tell them bad things about their favorite stocks, I have a free Discord. Link will be down below after this video, as well as I have a paid Patreon where through $3 gets you access to 100% of my content, right? But let's get down to it. What are these good stocks that I've at least partially researched at this point I really like, but haven't had enough time to put together a full-length video on them? Number 3, and I don't know that these are actually ranked as far as like 1 is the best and 3 is the worst. These are 3 really solid stocks that I haven't finished my research on that we need to talk about. But number 3 is BQE Water. So this is smart mine water management, cost-effective compliance for mines when they're basically managing their water and cleaning their water after mining, right? So this is an interesting company for me because what you see a lot of the times from my channel is I like to call them sideways plays. So this is in the mining sector. If you're bullish on mining, this is a stock that you might be interested in. You'll see me do this on my channel quite often, right? I don't cover a lot of oil and gas stocks. I really hate picking through, dozens, maybe 100 or a couple hundred oil and gas stocks, trying to figure out which one is the best one. If I'm bullish on the oil and gas sector, I can go to a company like Enterprise Group, evaluate their earnings, and look at the outstanding returns from Enterprise Group. Enterprise Group rents out equipment to the oil and gas industry. So this is kind of a sideways play to oil and gas. I've been doing the same thing with Game On Entertainment, right? I've been learning about blockchain and NFTs and cryptocurrencies, but I'm 43 years old. I can't pretend to understand it all. Game On Entertainment provides something that I can understand, which is a game, an engaging game to partners like La Liga and the Professional Fighters League. Game On Entertainment has also been very rewarding to me this year. However, these are sideways plays into industries that I like, and I like the same thing here with BQE Water. If I'm bullish on mining, if I'm looking at, okay, we need more lithium, we need more uranium, we need more whatever, this is an interesting play to get into the mining industry without having to get into the mining industry, as well as a bit of an ESG stock where it's actually water and mining, the use of it, and they're water stewards, they're not polluters. So no environmental impact from operations, minimal waste generation, local indigenous and community engagement to gain public support. So they assess production needs of companies, government regulations, social and sustainability as well. So this is a company that you could get into with mining and actually kind of feel good about yourself. But the main way that these companies make money, of course, is offering solutions. And that's what we need to research. That's what we need to get into with a company like BQE. Now, they're saying they offer cost-effective compliance, manage and mitigating risk with water, and customized solutions for your water needs. So far, it's been working out pretty well, right? This is a proven company so far that's still growing. 30 treatment plants designed and built globally, 4 technologies commercialized since 2003. All these numbers that we can look at to see if this is an interesting stock that we want to get into. Now, for me, what's bringing this up on my watch list is that BQE went up quite a bit up until about June 1st of 2021. And since that time, they did not crash after COVID. They've actually held their price. However, they've also haven't made shareholders money since about June 1st of 2021. They've been staying at roughly that same price. So when I look at that, I need to go look and see, okay, the share price has done nothing for basically 3 years. Is the underlying company improving? Because one thing that's happening right now is Atrium is going to provide research coverage on BQE Water. That's pretty big for a small company to get noticed. Can it actually bring shareholders value in the future? And of course, what I need to go research on BQE Water, this looks pretty good. You look at the increasing recurring revenue of operations year over year, proportional total revenue year over year, and it seems like it's increasing steadily, which is what I want to see. So when I compare it to the share price, which has done absolutely nothing for about 3 years, and I look at this slide right here, I think potentially I need to go do my research. There could be opportunity in BQE Water. Number two, second stock I wanted to introduce to you today is this is one of the coolest slides I'm going to show on this channel, or it is the coolest slide I've shown on this channel for a while. I think the last slide I had from a company that was, that I like so much was Big Bear AI. And I didn't like Big Bear AI as a company, but they had a pretty cool investor deck. And this is Gray Wolf Animal Health, right? TSX Venture Exchange Wolf. Absolutely love it. We are here for animals and for you. Now, this is an interesting stock for me because this is kind of in the pharma, biotech space, and these are not typically stocks that I cover. However, because it's in the pet and veterinary services, I'm willing to take a look. I typically don't cover pharma stocks for humans, right? But for animals, this is something that has piqued my interest. This is another stock. It kind of like pump and dump there around June 19th, 2023. Now they're back up, but they seem to be back up today on better fundamentals that I want to go research. So even though they had that spike there back in June, I want to see if this latest spike is actually earned instead of just excitement. It only has a market cap right now of $29 million. So still a lot of potential there. They're providing Canadian veterinarians and pet owners with innovative animal health products. So they have a pharmaceutical portfolio, which is growing, that they're selling out there to these vets and pet owners, as well as they have a non-pharmaceutical portfolio that we can go have a look at in our research. Their investment highlights I really like here. Like they're talking about strong organic growth, which they're getting. I believe it's roughly 12 to 15%. Historically, a resilient industry. We'll talk about that in a second. They've been making acquisitions. They may need to put a little break on it right now because they have a little bit of debt, but they are a company that is willing to make acquisitions, and they're in a solid financial position to drive growth. They have cash flow positive and solid balance sheet. Is that true? Right? That sounds good. I like cash flow positive and I like a solid balance sheet. When I go take a look at a few numbers here, I look at the bottom right, the 9 months ended looks impressive. Their EBITDA went from in September 30th, 2022 for $159,000 to 9 months ended September 30th, 2023, $2.7 million. That's some significant improvement in EBITDA. Their revenue on the top left increased year over year by 12.4%. Gross profit increased 8.3% and adjusted EBITDA increased 25%. Gross profit margins of 49 to 51%, sitting nicely at about 50%. I like that. I do really like that. They're talking about this, right? Historically, a resilient industry. Canadian household pet spending grew at a 17 CAGR of 6.9%. They're really coming in here to try to take over the market share. What has me interested in this company as well, $27.9 million market cap, revenue of $24.78 million trailing 12 months. That's not factoring in a lot of growth. This company is getting, according to just some basic Yahoo Finance numbers, quarterly revenue growth of 12.4% and total cash of $8 million, total debt of $10 million. So some interesting numbers here for you to go look at. I am super excited to go finish my research on Wolf just to see what they can do in the future. And again, back to this slide, absolutely love it. So Gray Wolf Animal Health. Now, number one, at least the last stock that I am going to introduce to you today is a boring one. And I kind of like these boring stocks. They've been extremely profitable, especially in the back half of 2023 and 2024 here. OneSoft Solutions, evolving predictive analytics with machine learning, innovative, disruptive, cutting edge. Now, before you think like this kind of sounds when I first saw it, just another one of those AI stocks I want nothing to do with. This is really not OneSoft Solutions. They have a very interesting niche here where they're using business intelligence and predictive analysis to create cost-efficient subscription-based software as a service solution. So I like software as a solution. I like recurring revenue from that. This is their historic revenues by quarter. So they have been around for a while. They have a history of success. However, that success seems to have been ramping up a little bit lately. And one of the reasons I think why is this seems to be a little bit, I've been looking for some of these companies that, stalled during COVID, had problems during COVID, simply didn't get the same amount of growth during COVID. And now that COVID is finished, these companies are starting to ramp up again. And you could see the red box here roughly that I've got highlighted was the COVID area. And they were still getting growth, but not the same type of growth that we've been seeing lately from this company, especially through 2023. And that is impressive growth. Now they talk about pipeline miles under SAS subscription. Pipeline is interesting because I was looking at this and I was thinking, okay, they're talking about the pipeline for their revenue. They're actually talking about pipelines. So they're using their AI in its infancy, included in the oil and gas industry. So they use a lot of their technology for pipeline growth, pipeline inspection and asset data from pipeline companies for all kinds of miles of pipelines that have collected data after data after data after data over the years for pipelines that are sitting in Excel spreadsheets that we will look at, right? If you look at their customers and partners, they're actually partnered with, Enbridge, right? Flint Hills Resources, Alaska Pipeline, Colonial Pipeline, a lot of pipeline companies. That is what they do. That is the opportunity here, is they're taking all of these old Excel spreadsheets for decades and decades and decades that these companies had built up inspecting these pipelines, and they're transforming them into from legacy data, from Excel spreadsheets into cognitive integrated management using machine learning, data science. They're actually producing something from this data. So the nice thing about this, the really nice thing about this with OneSoft Solutions is they can actually forecast this company amazingly well. If you go look at their latest news release where they talk about their most recent earnings as well as their future, they can actually give guidance very, very accurately. And I'm really impressed by that because typically with these small microcap companies, the future is always kind of hazy. And while there's a little bit of wiggle room with the guidance from OneSoft Solutions, essentially because what they're doing is saving people money. They have contracts booked into the future. They have their recurring revenue, and they can predict their guidance for 2024 quite efficiently. So it's absolutely fantastic for people to go research this if you like data, because there's a lot of data on this stock. The investment highlights from OneSoft Solutions is their first mover advantage. So not necessarily a moat, but they definitely are unique in their industry, right? It's a high margin of revenue model. They're building a DaaS platform. They have strong sales partners and clean capital structure. They have a strong balance sheet, sufficient cash on hand to execute their current business plan, so no share dilution. I know how everybody hates share dilution here in 2024. Now, what's been happening with share price? This is another one of these stocks. So if you see here, they were trading for around 82 cents right before COVID. All of a sudden, COVID hit. There was a good opportunity here for people to get into this stock, but the share price obviously took a hit. And now today we're sitting here in 2024 with share price just coming back up to their 2020 numbers. And you have to wonder if there's still opportunity here for growth, because this company obviously in the past 3 years, 4 years has been improving and their share price hasn't. So what can we look at? What is the potential of OneSoft Solutions? Essentially, it's their growth. This is it. This is what we're looking at. When you look at the growth of this company, why their share price has been going up, massive revenue growth. I think the recent quarter was 52% revenue growth, something like that. Go have a look. Go research this stock. Gross profit increasing 69%. Gross margins of 73.9% according to this software. The reason share price has been suffering, the reason share price has not been just flying to the moon with this type of growth, they are currently unprofitable. However, they have predicted positive EBITDA cash flow in 2024, something like that, right? So they're getting closer to profitability, but because in 2024, everybody seems to want that immediately profitable company now, share price has been struggling. But with this growth, it's not going to take long. So that is it. Number one for me right now is OneSoft Solutions. Number 2 is Gray Wolf Animal Health. Number 3 stock added to my channel is BQE Water. Whew, that's it. Let's see how everybody's doing. Questions, comments, concerns. How's everybody doing on a Monday evening? I wanted a nice, happy video because my live stream on Friday was talking about how we could see a downward market in microcaps in the spring, just because historically we do have that every once in a while, right? So it's nice to be excited. It's nice to put a few extra really, really good companies on our watch list so we can go research them. I'm really excited by these 3 opportunities here. Hope you have a video coming to explain the sale of Enterprise. I don't know if I need a video on it. It's pretty simple so far, unless something else happens. We'll talk about it in a minute. I'm a shareholder of Enterprise Group, E.TO, and made decent gains. I guess the news today is good for stock price. When will it be back trading? On the 12th of March. We'll go have a look at that. I'll open it up. Let's see. Acumen Capital Finance Partners Limited is the institution that acquired the 10% stake in the offering. Any good things about them? Nope. Haven't had time to research them. Enterprise Group had their offering about 15 minutes before the market closed. It was really late, so it's interesting. Good to have an institution buy into Enterprise Group even after the run up at 85 cents. Okay, let's just stop this here. All the questions are Enterprise Group. Look, after I cover Enterprise Group, you could better talk about the 3 stocks that I just covered on my channel here, right? So let me just fire this over. Let's see what we got here. Enterprise Group, that's the 1-year share price, right? That's fantastic. In 1 year, past year, it's gone from 37 cents to 92 cents. A 52-week range, 36 cents to 93 cents. So this is a very successful stock, and it's probably still undervalued today with a market cap of $45 million. At least their management obviously thinks that it's undervalued. So Enterprise Group has been doing share buybacks from around the price of, what is it, 40 to 50 cents roughly. So when they felt they were severely underpriced, they've been doing share buybacks. Now, interestingly enough, after all those share buybacks, the company does some share dilution, right? So that's it seems a little counterintuitive, but at the same time, it's a little bit brilliant, right? You buy back shares when they're cheap, and then you do a little bit of share dilution when the price goes up a little bit because you need to grow. I'm going to try to zoom in a little bit here. Enterprise Group announces additional private placement of units. I mean, there's not too much that I could talk about here that you just can't read. Right? What do we got here? Where is it? I'm even up to 2 million on the same terms, including private placement, amended offering. This doesn't look like what I read earlier. Is this a different one? Right. We started here. Is that an amendment? I didn't even read the amendment. So the offering from Enterprise Group, 5.8 million shares for 85 cents. So we were sitting here looking at a share price today of about 92 cents. So immediately when I saw this, I thought, okay, share price might drop, but there was a trading halt, right? So it can't drop. Now, I'll talk about whether it could or can't. Like a lot of times when you get an offering like this, like you saw with Kraken Robotics was up to one point at about 95 cents. Kraken Robotics had a cross trade at around 85 cents, and the share price dipped for a bit. Typically, when you see an offering like this at 85 cents, which is below their traded price today of 92 cents Canadian, you could see a share price dip. That's going to give them about $5 million, right? Now, the one reason that it might not cause a share price dip is they also have everybody who buys the warrants will get 1/2 of a common share purchase warrant. So you're going to get half a warrant for a period of 2 years. So share price has to go up in the 2 years. And that's at a price of 95 cents. So that's actually higher than what it was trading for today. 95 cents is actually higher than what it was the highest. The 52-week high was only 93 cents, right? So the half warrant that they're going to get or give is at 95 cents. So it's higher than the 52-week high. The company tells you specifically what they're going to use the money for, right? I know people have been asking about that. They intend to use the net proceeds of the offering to expand its fleet of rental equipment with an emphasis on low-emission mobile power systems and for general corporate purposes. So if you go back and watch my video, go research the stock. The real opportunity here for Enterprise Group is those mobile liquid natural gas generators that they've been using. So What we typically see on a lot of these mobile work sites for drilling, oil and gas, construction is a whole bunch of diesel generators. And what Enterprise Group has is all these natural gas generators that are basically operating as like a power facility, where it powers one generator, basically powers the whole facility. Whereas the legacy products, you might need 10 different diesel generators in different spots powering a facility, a large facility, right? Enterprise Group comes in with their one. And what they're going to do is rent those out, right? So when you talk about this money purchasing $5 million, purchasing these low emission mobile power systems, essentially you can hope that that $5 million is going to turn into $5 million in revenue soon, $10 million, $15 million, right? That is the purpose of it. Now, they also say for general corporate purposes, but they also have some cash in hand and everything else. Closing of the offering is expected to be on or about March 12th, 2024. No, I think the trading halt should end tomorrow, right? So it's not going to hold off until March 12th. That's way too far away. But that's essentially what happened and what is going on with Enterprise Group. Now, at the end of the day, is it a good thing or a bad thing? It's tough, because when I spoke before on Enterprise Group, I said, this is your opportunity. Enterprise Group has first mover advantage to take their rental products and expand. And I was hoping they would have either more debt or more share dilution, get an acquisition, expand geographically, buy more rental units, buy more equipment, and make sure they cover as much as the market as they possibly can before they start getting more competition, right? So this is good. The problem is share dilution. Everybody, it's bad, it's bad, it's bad. Bad share dilution. I get it. So even my first reaction is, I don't like it at share dilution. It's bad. Yet my original thesis on Enterprise Group is I want them to take as much cash as they need to expand this company. So overall, I think it's good, right? And the other thing that is good about it, of course, is thank you very much for pointing that out, Lucky Candy 101, right? I didn't highlight in that news release, this isn't going to retail investors. This is going directly to an institution. So a 10% stake in Enterprise Group directly to an institution, absolutely fantastic. They get to take that money and expand. That's where I'm at. All right, more questions, more comments. I'm willing to chat. Let's see. Great call on Kraken. Thank you. It's my number one stock pick for 2024. Doing absolutely fantastic. Look, I'm hoping to have a good year this year. All I need is Well Health Technologies to do something. Every one of my stock picks for 2024, if you go back and look at that video, every one of my stock picks is doing absolutely stunning, except for Well Health Technologies. They need profitability, right? Let's see here. All-time high on ADF Group. Yeah, fantastic company. How high can this one go? I talked about this on my last live stream. It's not even fair, right? ADF Group is just up and up and up and up. And now after hitting 52-week high after 52-week high, they just started marketing. That's scary, right? That's scary. They just hired their first IR firm. They just started putting out their first promotional video. Absolutely stunning what this company has done. And they're just starting marketing now. You're in Wolf right now. Fantastic, right? I mean, it had the dip. I think that was a really good opportunity, but right now we still have to go take a look and see, is it undervalued? I potentially think it is. I'd like to keep researching Gray Wolf Animal Health. I think that could be a fantastic long-term investment, but I need to go finish my research. You need to go research it as well, right? Oil and gas data is noisy, and the legacy Excel data are a nightmare to work with. I'm interested to read testimonies on their services, ROI on pipeline health prediction based on the pig data. There we go. There's somebody willing to talk about and go research OneSoft Solutions. Look, even if you're not experienced with oil and gas, it's another sideways play a little bit. OneSoft Solutions, you don't have to understand the pipeline industry to be able to invest in this stock. Go look at their earnings. That's what I love. That's my expertise, right? Looking at the numbers, evaluating the numbers, reading the management discussion, watching the interviews, getting out of that whether I am interested in this stock or not, right? And if you go look at their numbers, they have stunning growth, stunning growth. What has been keeping people away, at least in my opinion, is their lack of profitability right now. But with OneSoft, if they continue on this trajectory of growth, there's no way that lack of profitability continues. I think people are being a little bit short-sighted. That's why it's all the way up here at number 1 on my video today. Go take a look at OneSoft. I just wish there was more volume. Well, that's every yes, look. Canadian microcaps, right? Here's the thing. It's tough. This is our advantage. This is what we talk about. Because of the low volume, institutions can't get into these stocks, right? Large investors sometimes can't get into these stocks. This is our advantage as retail investors. Everybody talks about penny stocks being risky. Absolutely they are. They take way more research. They take way more experience. They take way more accidents and mistakes and FOMOs and learning and coming back to the drawing board and learning how to invest properly in microcap stocks. But if you do it right, that lack of volume is really our advantage because we are the only ones who can buy into some of these companies, right? What I hate are some of these companies that always do these private placements to retail investors because they're probably going to do nothing but dilute shareholders for years and years. Hello, Voxter Analytics, right? But when you get these companies that aren't offering private placements because they're positive, they have cash, they don't need it, and really they've got this low volume, this is our opportunity as retail investors to get into the stock. And then as it improves, as it can't be ignored anymore, as the company's earnings keep going up, as it gets noticed by more investors, it's all a matter of supply and demand, where all of a sudden that low supply, that volume that we hate today, because it's hard to get in, there's just not enough volume on some of these stocks, but the volume that we hate today, if it works out, if our thesis works out, all of a sudden turns into a massively low supply in the future on high demand. Right? That's how we invest in penny stocks. It's not just the company earnings, the company improving, it's the multiples improving. And there's many videos out there talking about that. That is what we want with our penny stocks. We want the company to be improving. We want the multiples to be improving. One of the best ways to get there is to have low volume today and high volume in the future, right? Oh man, this is a tough one to say. The Kushnaruk CEO family is a well-established name in Alberta. I wonder if that plays an advantage to securing more contracts with their connections. Probably, I wouldn't doubt it. I'm assuming you're talking about OneSoft Solutions. So Enterprise Group is actually in Alberta as well, right? This is well-established. Everybody knows everybody out here in Western Canada, and their connections do play out. Like company reputation does matter. And sometimes probably it affects bottom line and everything else a little bit, right? Sometimes shareholders can be a little bit frustrated. There's probably some kind of handshake deals and stuff going on over there. But yeah, I mean, well-established name, well-established company. Like a lot of people look at a company like OneSoft and say, well, it's been around for a long time. Why invest now? Go have a look. Go do your research, right? But what you could see, or at least I can see, I'm starting to see that recurring revenue get added to their new revenue, and the combined totals for that are really taking off nicely, right? Sometimes it just takes a little change. And of course, our big change right now is we had such a massive bear market in the oil and gas industry from about 2014 to 2021. So we had 7 years of just epically disaster oil and gas market. Enterprise Group survived. Now they're thriving. OneSoft survived. Are they thriving? Right? That's part of the excitement here. You're really real one, buddy. I like that you're a genuine soul. Well, thank you. I mean, I put it down to like, look, I've always done this, and I get so upset this year, especially. Like it's really adding up for me because what happened is, in 2020, 21 with COVID, a lot of new investors, like they were talking about how 20% of retail investors were new investors. So for every 100 investors out there investing, 20 were absolutely brand new to the stock market. I think that number is higher in microcaps, right? And that's fantastic. We need new microcap investors. We need new penny stock investors. But one of the problems is a lot of the new investors are coming in and they're learning from Wall Street bets. They're learning from FinTwit. They're learning from social media. They're getting these things like HODL forever. They don't know the difference between trading and investing. That's a huge difference, right? Like when I'm researching these stocks today, if you're watching this video, I also normally have a disclaimer. Look, there's my slide right there. Investing, trading. There's a huge difference, right? You need to understand that. The stocks that I'm looking at today, I'm looking at for long-term investments. Now, other times I cover stocks that I might want to consider a trade, but there's so much confusion out there with the new investors. But it's really getting to me now because what's happening is a lot of the new investors have been around now for 3 years, right? They're learning the ropes. And I'm still reading a lot of crap out there that really bothers me. And what bothers me is meme stocks, people who aren't willing to discuss the red flags, the problems, the risks with a stock. Like how you invest is you look at the green flags, the rewards, and the risk. What could happen? What could possibly happen? Where you could be wrong. And you compare those two and you look like, okay, what is my reward? What is my potential reward? What is the possible risk? How can I mitigate that risk? You weigh the potential reward against your potential risk, and then from that, you decide what you want to invest in. Anything else, at least in my opinion, is bullshit because you go to these investing groups and you see these people promise you that you're going to become a millionaire. There's no risk. It's all reward. It's all going to work out. This is the greatest company in the world. It's the greatest stock in the world. Absolute bullshit. Sick of it. Sick of it. I've had one YouTube channel canceled because I've been exposing scams. I'm trying to be good. We'll see how long it lasts. Right? It might not last forever. But I'm going to do a quick summary. Give everybody a chance to ask any final questions. I've talked about Enterprise Group. I've talked about everything I needed to today. And I'm out of questions or comments. Do not forget, right? Link down below to a pinned comment, free Discord where we talk about all these stocks, paid Patreon. I was just ranting forever there. Always make sure you look at the risk of a stock, not just the reward, right? You compare the two and make your decision from there. Now, I believe that cheerleading stocks has been the greatest money loser since COVID. People become fans of stocks. I don't have the data yet to prove that, but that's what I'm looking at for the past few years. Cheerleading stocks has lost people nothing but money. Now, I get criticized for being grumpy and miserable and always talking about how stocks have problems and making you aware of all the risks and it's negative and people just want to be happy. Being happy all the time will lose you money. I will promise you that, right? You need to be skeptical. You need to look at these stocks with a critical eye. You need to ask questions. You have to judge them. They have to prove to you that they are not a scam. And that's why with some of these stocks, even with BQE Water, I have no idea where share price is going to go. I'm looking at them today, doing my research and trying to decide whether or not the risk versus reward profile is good enough for me. I do absolutely love that they provide a little sideways play into the mining industry. I don't have a lot of stocks that are in mining, so I'm very interested in BQE Water. Same thing with Grey Wolf Animal Health. I mean, if you look at my video and you look at the diversity that just these three stocks offer, absolutely fantastic. You're into mining, you're into veterinary and animal services, and then you're into pipelines, but this is also a bit of an AI play, business intelligence, predictive analytics, right? Everybody's looking for the best AI stock and they're thinking it's going to be the next ChatGPT, some exciting AI play. Most of the AI stocks are absolute scams on the OTC. And right now we're looking at a really good one in OneSoft Solutions, right? So that's my thoughts for the day. You don't like the fuckery and deception. You like legitimate information and conversation based off truth. Absolutely. That's a fantastic comment to end the night with. Thank you for joining me here today. Hope to see you again soon. Hope you have a great week of investing and trading, whatever you need to do. Hope you're making money. I hope you really like the stocks in your portfolio. It's a good time to take a look, which ones you like, which ones you don't want. And, here's 3 options for you in the future. I have a few more videos coming out this week as expected. Maybe it's one of these, maybe it isn't. You're absolutely welcome. Thank you for watching. Really appreciate your